Investing should be a very important part of your life, and if you're not investing yet, there is absolutely no reason why you shouldn't start investing now. In this video, we'll look at some simple investing strategies to begin with. I mean, a lot of people have this perception that you can only start investing once you have a lot of money, but it is far from the truth. You can start investing even with the minimum amount of money that you can put aside, even if it means just a few dollars to begin with. But before you start investing, it is important that you know about various strategies that you can use to start investing in. Your investment strategy should be a combination of the amount of money you would like to invest and what is the time frame that you're looking for to invest the money in. How often do you want to invest? What is your risk-taking ability or your willingness to take risk in terms of investment? And what is your ultimate goal with all these investments? Do you want to use the investment with a particular goal of buying a house, taking care of your education or the education of your children? Whatever your goal might be, it is important that you know what are the various avenues of investment and what are the various ways you can do investment in. In this video, that is exactly what we are going to look at. Not everybody will have the same kind of investment strategy. Your investment strategy will depend a lot on your age, your disposable income, your dependence, your risk-taking ability. For example, if you're younger, you could be more aggressive with your investments. If you have higher disposable income, you could invest in higher risk investments with higher profit margins and so on. We obviously need to understand that your investment is a combination of risk and profit. High risk investments have a potential for higher profits, and low risk investments will give you lower profit margins. So your strategy will be based on your risk averseness or your ability to take risks. There are, of course, very safe options that you can actually invest your money in. Or you can keep your money in your savings account. It will give you really low interest rates depending on which part of the world you're in. For example, if you're in the US or the UK, the interest rate that you actually get on something like this is almost close to nothing. The other option is obviously you can keep your money in fixed deposit. Again, just like savings account, your money is going to be really safe. And in a fixed deposit, your investment, your interest is going to be higher than in your savings account. However, you have to remember that your money is going to be locked in for a certain period of time, and the liquidity for this investment is going to be very limited. Now, these are really safe options you can actually utilize, and you can always know that your money is going to be safe. But at the same time, in terms of investment, this is not really much, because the amount of money that you can make from this is going to be almost, well, either you have to wait for a very long time to actually see some kind of results, or if you want to have liquidity in terms of savings account, the interest rate is going to be very low. So this is not really an investment strategy. So this is just to keep your money safe, because when the money is with the bank, you know you will always get that, and there is always that safety factor, and you can be rest assured that your money is never going to be actually utilized for anything else. Even if it is utilized for anything else, you will always get it back. But if you're looking for higher returns, you need to be a little flexible with your risk-taking abilities. Now, we'll look at some of the options which can potentially give you higher returns, and this could be your first step or the next step in investing. Always remember that while investing, you should always only take calculated risks. Your basic aim for any investing should always be never lose your money. Investing is a long-term process, and you invest only for a short term, this could actually lead towards a loss. Always remember that you should only invest the money that you're not going to need, let's say 6 months down the line or 5 years down the line. Your investment should be only with the amount of money that you can actually put aside for the next 5 years. That should be the least amount of time frame that you should keep for yourself while investing, and if you really want to make any kind of profit. Your investment outlook should be for at least 5 years or longer if you really want to see your money growing. And one of the most important factors while investing is your emotion. As Warren Buffett says, investment is not for people who cannot keep their emotions in control. You don't want to be actually looking at the prices, if it's increased, if you've made any kind of profit. If you cannot control your emotions, if you cannot hold on to the investments that you've actually made, the investment is not for you. If you really want to see your investment grow, you should just forget about it. Invest your money, forget it for the next 5 years, and eventually it will definitely give you a lot of profit. I mean, you've seen the markets over the year, over decades, you've seen that people who've actually earned any kind of money are the people who've been invested in the market for a long period. Stop looking at the daily market fluctuations. Stop worrying about market corrections. In fact, the best way of investing is when the market is actually crashing or market is going low. That is the best time to buy. It's the best time to buy, unlike what most people do, is when the market is going down, and the best time to sell is when the market is going up. Most people do exactly the opposite of that. When they see the market going up, they think this is a good investment opportunity, but this might not be the case actually. Always sell when the market is going up, but wait and buy when the market is down. Now, the first strategy towards investing is income strategy. What does that mean? So if you're really low risk averse and your risk taking appetite is really low and you want to put your investments in something that is really safe, but also at the same time will give you something like a steady source of income, then income investing is the way forward for you. So if you don't understand a lot about market, but you still want to invest, this is the way forward for you, and this will give you a steady source of income in terms of dividends, in terms of interest, and it can become a steady source of income for you. These investments could be a combination of dividend paying stocks, bonds, mutual funds that give you a steady source of income in terms of interest, in terms of dividends, and this could almost guarantee you some kind of income coming through you steadily on a regular basis. Now, these investments are generally for people who do not have an active source of income and they would like to use their current capital to generate more income for them. So for example, somebody who is a retiree and who has let's say a corpus with him or her, they can start using these to generate more profit. This is a comparatively safe and steady source of income, but it has a shortcoming to it. The main problem with these kind of income is that you need to have a huge capital to actually invest from the very beginning if you really want to live off the interest or live off the dividends that come through these investments. So unless you have a huge amount, a primary amount to invest in, you can't really live off them, but obviously they can still become a source of income in terms of whatever you get, and this will give you some kind of returns, but this is not going to be something that you can live off. The dividends and the interest paid by these investments are really small, and of course this can add to your investment strategies, and this could be one of your investment strategies, but this cannot be your main source of income. Now, the next investment strategy is the growth strategy. This is the investment strategy in stocks of the companies which show a huge amount of potential of growth in the future. Now, these are typically stocks like Tesla for the time being, which in the past few months or so has shown tremendous amount of growth, and it has a potential for its stock prices to go through the roof in the future. But before you start investing into stocks like this, you need to understand you are at the right time and the right stage of investing in these kind of stocks. More often than not, people think that it has a huge potential for growth, but without really understanding, people invest a lot of their money into something like this, and then it just kind of plateaus and it doesn't really give you the kind of returns that you were expecting. So you need to understand you are at the growth stage. You need to understand that a company will have a great future and a great growth potential. For example, people who invest in stocks like Google, Facebook, Apple, I mean, I'm sure everybody gives you the same example, but that's the reality. In the early 2000s, people have invested in this and have stayed investment. You know, the prices of these stocks in the last 15 years or so have actually been massively different from what it was when people invested at that stage, because that stage was a growth stage, and people who understood that these companies are going somewhere and they have a bright future and have invested in their growth stage, and this has led not only to the growth of these companies but also to the prices of the stock, and therefore the kind of investment that you have, and which is right now multiplied into, let's say, almost 10 times, 50 times, 100 times some of them. If you can find similar companies which are at the early stage of growth, you should start investing, because it can potentially lead to huge amount of profits. And the important thing is, how do you actually find these kind of companies? Obviously, you need to study the market, and you need to study the companies which show an above average growth as compared to the other companies in a similar industry. If you get into these companies at the right time, this could lead to a huge amount of profits on your investment. If you have a higher appetite for risk taking, you can take this investment strategy a little further and start investing in small cap stocks. Now, these stocks are typically like the growth stocks, which means that they can actually give you a huge amount of return in a very short period of time sometimes when they rally. But they also are very dependent and are very volatile. The volatility depends on how the market goes, which way the market is going, and sometimes it can give you really good amount of profit, but at the same time you need to understand these are stocks that can also create a big loss for you. They can go down just as fast or even faster sometimes, and can lose a lot of its valuation. The problem with small caps is that it is very volatile, and this can be easily manipulated. So if you are a big investor or institutional investor and you want to actually even, let's say, choose a stock to manipulate and start investing in it so that you can see the prices go up, and as soon as the prices go up and you see that it's kind of showing a downward trend, you can just actually take the money off When I say you, I mean the investors, the big investors and the institutional investors. And if you're also invested, maybe looking at the trajectory, saying that stock is going up and you should be investing into it. And if you invest at the wrong time, and when these guys pull out, the stock prices can really go down, and this will actually lead to massive losses. So unless you understand, unless you are one of the big investors, unless you understand the market really well, and unless you know that you are doing the right thing at the right time, you should kind of be very, very careful while doing this. But also remember, it can give you massive profits in a very short period of time, but at the same time it can also lead to massive losses. So be very, very careful when you're actually investing in small cap. I would generally say, if you want to invest in small caps because you want to actually reap the profit, you should only do it under the supervision and guidance of somebody who's actually certified and who's a professional in terms of investing, and only under the guidance of such person you should actually do it, unless you are one of them and you understand the market really well. But without that, it is always a high risk, even though it means that it can potentially give you a lot of profit. Now, the next way of investing, the strategy for investing, is called value investing, and this is perhaps the best way, and a lot of people say should be the only way of investing in the stock market. Value investing is the strategy that most major investors across the world have been using for a very long time. Warren Buffett himself has been using this for a very long time and has been gaining a lot of profit with very low risks actually. What this basically means is actually buying the share of or a stock of a company when it is on sale or when it is undervalued. Now, this could happen because of a lot of reasons, like a recession or a dip in the share market or other economic reasons. This basically means that these stocks are priced lower than what they are actually worth. And this is the ideal time to buy these stocks. Obviously, you don't see a recession or a dip in the share market every day. So you have to be really patient in terms of your investment strategy in this, because you need to find the right stock at the right time. You need to understand what is the actual worth of a certain stock, what is the actual worth of a certain company. And if it means that you have to actually wait till the prices of the stocks go down, you have to wait patiently and only buy these stocks when they are at a point where you see that they're worth way lower than what they are actually worth. Obviously, you cannot expect to gain profits from this overnight, and you have to be really patient, and it is only over a period of time that you will see gains coming out of it. So if you invest in a stock which has been undervalued, for it to come to its basic level and surpass that level, it is going to take time. So patience is the most important thing. Like again, Warren Buffett says, if you are somebody who is not patient, somebody who cannot keep control over emotions, you should probably not get into investment. So patience is very essential. Hold on to these stocks, and if you can get these stocks at these kind of prices, there's nothing like it. You should hold on to it because you know the future is going to be bright. You know the returns are going to be fantastic. So hold on to it, be patient, and almost always, if you are actually invested in a good company, it will give you good amount of returns. Obviously, finding these kind of stocks is not going to be easy, and it is therefore always important that you invest in yourself. That is the most important thing. Always educate yourself, invest in yourself in terms of learning about companies, in terms of analyzing these kind of stocks, in terms of finding the right way of choosing the stock at the right price. So investing not only in terms of money, but also in terms of educating yourself about these companies and how to actually analyze is equally important. This kind of investing is the right way of investing, and this should be your primary way of investing with a longer time frame in the market if you really want to benefit from your investments. This is simply about investing in the right stocks and forgetting about it for the next few years. When the market corrects itself, it will definitely give you a lot of profit. These were some of my suggested strategies to start investing. Always remember to educate yourself or take advice from somebody who's an expert in this. And I hope you really liked and found value from this video. If you have, please like the video and subscribe to the channel. I would really appreciate if you do that. All right, thank you very much, and see you in the next video.